even more so than normal, this is a bad time to do it. This is the the House proposed budget is loaded with tax increases, and tax increases not just on sales and on services, but on income, personal income and corporate income, franchises, and a number of other areas. And in the personal income one, adding higher tax rates for people with higher incomes is extremely troubling for job creation in the state, because those are the small companies that provide most of the employment gains in normal times. And if you tax them more, that means that they're going to be able to hire fewer people if they're even able to stay in business.
Let's go into that into more detail, because some people will see that higher personal income tax rate and say, hey, these are the wealthy people. These are the people who can afford to pay more taxes. Shouldn't we ask them to spend more to help our struggling people who need these government services? Why is that the wrong way to look at it?
Because a lot of businesses, whether they're single proprietor or whether they're S corporations, which those are pass-through organizations. So the company's income is taxed as personal income. The company doesn't pay any taxes on its own. All of the owners, all of the shareholders pay the taxes as part of their personal income. So if you have an individual who runs a small company, that person can end up in one of those higher income tax brackets, and that will make it more difficult for them to be able to hire because they'll be paying 8.5% on their last dollar earned instead of 7.75%, which is already high and pretty high, one of the highest in the Southeast. But once you get up to 8.25%, 8.5%, that becomes almost impossible for them to justify expansion and being able to hire another person, because they're already giving more money to the government, and each person is then going to cost even more.